Hi everyone, welcome back. Big news this week. The Federal Reserve just made its first rate cut of the year. It was a modest quarter-point cut, and it's already making waves in the housing market.
That's right, mortgage rates had already been trending down in anticipation of this. And as of last week, the average 30-year fixed mortgage dropped to low sixes. That's a meaningful shift for buyers, even if it's not the dramatic drop some might hope for.
Here's what it really means. Slightly lower rates translate to more affordability. Plain and simple, right? For many buyers who are on the sidelines, this can be the difference between qualifying for the home they want and not qualifying at all.
Exactly, and we're already seeing the response. Mortgage applications shot up nearly 30% overnight after the announcement, right? That tells us there's a lot of pent-up demand waiting for even small movements in rates.
Yes, we feel it. Now let's be clear, just because the Fed cut rates doesn't mean mortgage rates will keep falling in a straight line. They're influenced by a lot of factors, like the 10-year Treasury yield, inflation, and investor confidence.
Right, we saw something similar last year. The Fed cut rates a few times, but mortgage rates didn't keep sliding. They actually bounced back up above 7% by early this year. So while economists are forecasting we could stay in the low 6% range through the end of the year, there's no guarantee you'll see rates dip significantly more anytime soon.
So what does this mean for you if you're thinking about buying? It means you might want to consider buying sooner rather than later. Why? Because with mortgage applications up, that means more buyers that will start getting in the market. We already have a lot of buyers that have been waiting for rates to drop, and this will create more competition on the homes you want to buy.
And for sellers, this is good news too. If your home has been sitting on the market, a lower rate environment could be what finally brings the right buyer along. On the flip side, if you're selling and also planning to buy, now is your chance to move into something more affordable before the competition gets even tougher.
One big mistake buyers make is waiting until next year or when rates drop further. The reality is that the fall market could actually be one of the best times to buy. We say it every year. Inventory is still higher right now with a lot of motivated sellers, but as competition ramps up, we'll likely see inventory tighten.
That's a key point. If you wait until the new year, you could be looking at fewer choices and more bidding wars. Buying this fall could give you better opportunities with less competition compared to what's coming.
Here's the bottom line. Interest rates may have only nudged down slightly, but the ripple effect is huge. More affordability, more buyers jumping in, and the shift towards a more competitive market.
If you're even thinking about buying or selling and buying, this is the time to connect with us. We'll walk you through your options, connect you with trusted lenders, and help you make the smartest move in this changing market.
If you can, don't wait until it gets competitive. Reach out today and let's get you in the right home this fall.
Thanks for watching, and we'll see you next time.
We did it.
Good job, Randolph.
I want to sleep. Could be what finally brings the right buyer along, and something like that. And I was just like,
That was
I was like.